this presentation is obviously aimed around asset management, but we want to do a deep dive on the financials and the bookkeeping quadrant, so to speak, around apartment asset management. And so, I guess foundationally, I want to align with everyone. There's different people with a different experience in here. So let's just align real quickly on, what is asset management? What is it composed of? And there's and I do say quadrant very deliberately, you guys can see from the picture here, but you have your day-to-day operations. You have your business plan oversight, whether that's value add or new construction. You have the investor relations part of it, whether that's a retail investor or an institutional investor, or even the bank. There's some element of investor relations there. So our focus for today is going to be around the financials and the bookkeeping side of apartment operations. I know I was pretty clueless of that coming into this one, coming into the space. And so I've learned a lot through the last deal that we've syndicated, hoping to share with y'all some lessons learned and, maybe some universal truths. So the way that we want to propose, sharing this information is, chronologically, just kind of the narrative around, buying a new apartment, also managing it. And so this is actually going to be, kind of the start to asset management is actually before you have the asset. I would propose. And so we're going to focus first on, the due diligence and underwriting. Stand by for me 1 second. Sorry. Yeah, go ahead. And one more click there. And so it's probably not intuitive that, it starts at the due diligence and underwriting part, because there's, when you think of separation of responsibility, there's an underwriter period, and then there's an asset manager period. But if those two people, aren't the same, or they're not, coordinating with each other, then, the asset manager, I would say, is set up to fail. And so the asset manager has to overperform based off what's in the spreadsheet. The spreadsheet should be nothing more than just defensible underwriting, for the purpose of, getting a deal done, but also putting something in front of an investor that you think you can over deliver. When we're talking about longevity of relationships in this space, that should be your goal, is to outperform the defensible underwriting there. And so it all starts with, what is the business plan? That's going to kind of feed your 5-year projections. That they should be building the business plan with help of your partners, like your property manager as well. Mainly because you want to align on what is a realistic CapEx and OpEx budget. Do you want to add 10 to 20% on top of what they give you to be conservative? How do you want to handle that? But also, the roles and responsibilities among the team. So many times I've heard of instances where someone said they were going to do something and then they didn't do it. So, having 1 or 2 names, actually, I like having 2 names assigned to every role. I think that's best practice. Just in case someone goes on vacation or is unavailable or sick or ill, or, God forbid, gets hit by a bus, right? There need to be two names for every activity. And I'm going to stress this again, just because it's worth stressing. The asset manager's role is to outperform the underwriting. Right. I'm oversimplifying a lot here in that statement there, but that's just kind of the reality of the situation that we're in. All right. And, moving on to the next phase in our narrative, that's going to be at takeover. So we've underwrote it appropriately. We've got it under contract, purchased, and now we're at takeover. So this is a little bit of a takeover checklist. It is not all inclusive, but it is pertaining to the financials and the bookkeeping around that. So, there's a little bit of tongue in cheek in this one. So trust but verify the previous PM. I don't know anybody that's has a pleasant transaction, with a PM that's getting fired. There's always something that's misrepresented, or they didn't give you all the keys, or by the way, you're not really at 95% occupancy, you're at 90% occupancy. I was having lunch with a friend. He said, I took over a property that was once in the 90s and, come to find out it's actually in the 50s. I got to think that was more economic than physical, but still, trust but verify. But also, if I think a lot of us play in the B and the C type assets. So if you're in the C assets and you have some Section 8s or some housing assistance, make sure that you're taking the action required to get the housing assistance payments coming from local government, et cetera. Get those redirected appropriately. We've had somewhere between $15 to $1,000, which is an entire month of NOI, be outstanding payments that the Section 8 officers have been sending to the wrong person. I mean, for 3 to 6 months. I mean, it just gets, and then they asked us to stop coming in the office. So there's so many things where it's just like, really, really, really. So just be aware of everything that could fall. So trust but verify with previous PM. As you're transitioning the property managers, whenever we're talking about having the new property manager in place, establish that cadence and know what you want to touch on the property. They need to be open-minded in how the processes, but also transparent in their processes as well. And this is the thing that we really did to step up our game recently is, we established, the annual and quarterly targets. That wasn't revolutionary, but we shared them with the PM, and that's now on the weekly review. So this is our NOI, this is our leasing, this is our work orders, average work orders open, days to get completed, et cetera. Those are front and center. And if anything is highlighted in yellow or red, you bet there's going to be questions around that type of stuff. So holding them accountable to things like the operating budget that they should have provided estimates on is totally valid thing to do. So another point of this one is, bookkeeping. There are a couple options around this between doing, getting a fractional CFO or, a bookkeeper set up. Thankfully we've had a full-time bookkeeper, or I guess we've hired a bookkeeper separate from our CPA. Whenever we're talking about tax transactions versus, coming up with monthly actuals and, versus budget. So, also, establish those two roles and then the KPIs and know what you want to track coming out from each relationship there. And I think one more click. So identify the desired reports you want from each party, the property manager and the bookkeeper, as well as the cadence. There's going to be some financials that just don't make sense to get on a weekly basis. What is the rent collected on the 5th of the month probably isn't going to be the same as rent collected on the 20th of the month. So where is it more valuable to spend your time measuring KPIs and stuff of that sort? And the plus is there because this is not all inclusive of, the takeover checklist. But Marc, I think you had a couple other items related to this.
Yeah, so absolutely. So I guess the big stressor here is, again, asset management takes place or happens even before you take over the asset. And this is all the stuff, we're still kind of pre-acquisition. So this is even kind of takeover. The first thing, that I kind of fall back on in this business is systems and processes. So it's not enough to have the right team in place. You also have the right systems and processes agreed upon going into it. So one of those silos or areas where you want to have systems and processes is investor management. You want to obviously outperform, like Tommy was talking about, but also in addition to outperforming your projections, you want to create an experience, a best-in-class experience for your investors. And so for us, the tech that we use is InvestNext. I know a few of us kind of use and are familiar with InvestNext. There are a bunch of other platforms out there. I'm sure a lot of those names are familiar to a lot of us. But on the process side, it's really our cadence is a monthly investor update. We provide them a number of different kind of areas of updates. So what's going on in the local market for a lot of our deals, most of our investors really live outside of that market. And so they're not as aware of what economically is going on and driving those areas. So we'll give them a brief update every month on what are the developments there. We'll give them some update on what does the business plan look like today. What are some KPIs, so some metrics that we feel are pretty indicative of how we're performing, so that they understand kind of how things are moving in terms of the business plan. And we'll touch upon this section a little bit later, but I think the key here is just communication and transparency, and having these systems and processes in place going into it ensures that the minute that somebody wires you the funds, the very first thing they should hear back is we've received it. And that's kind of a good indication of the level of communication. But it has to be not just the fact that okay, we're going to promise to do all this stuff, but that we're giving you periodic updates throughout the life of the investment, that you feel that you're aware of what's going on with your hard-earned capital. So then the other another silo that is really the crux of this is asset management. So for that we use Asana, project management software. A lot of us have used QuickBooks on the bookkeeping and accounting side, as well as for a lot of the KPI tracking, we use Excel and Dropbox to be able to share documents there. Processes. So really that boils down to our level 10 meeting. For anybody that's familiar with EOS, Level 10 meeting is really integral to that. And, I think we're going to go through kind of the format of that meeting, but it's basically takes what I think maybe some of us with W-2 jobs or, I guess any kind of history in corporate America, it takes those meetings, the meetings that we all don't want to attend, it kind of turns on its head, where it's not about giving updates. It's more about, what are the problems that we're facing and thinking really strategically about coming up with solutions to them. So these meetings are really actually worthwhile use of everyone's time and not kind of just, updates. And then construction management. So this is kind of, some people would put this outside of asset management, but we view this as part of, running an asset, is, overseeing the value add plan. For our tech stack, we use, again, Excel and Dropbox. And the process there is a little bit more fluid because that's more of a day-to-day thing where it's not, once a week that you talk to the property manager. It's really, throughout the week that, folks either on your team, if there's somebody on your team that's going to be handling this, or exterior to your team, extension of your team could be like a GC, or even, your property manager could have somebody that really specializes in construction management. And so those are going to be daily calls with contractors. And it can really take any form from there. But communication and coordination with the PM on your turns, it really just ups the ante for this particular area. So now that we've taken you through all of the steps to asset management before you even take over the asset, now you've closed. So the hard part is done, or like most beginners like to think. But that's really where asset management, rubber meets the road. So we're going to talk about operations now. And this is going to be really a deep dive on what does our financial asset management look like? Why is it important? So, obviously to your investors, they want to know that you've got the confidence that you've got the right property manager in place, and that you're, seeing through the business plan that you said you would. And so I think a big part of that is monitoring the financials, because all of this, in terms of the turns, in terms of the repositioning of the asset, in terms of all the improvements you're going to do to the asset, all of that is going to bear fruit in the financials, potentially with some kind of a lag there. And so having a really good process for monitoring that stuff, the KPIs, is going to be all important. This is how we approach it. So we start with another kind of concept from EOS, which is that same book that I alluded to earlier, Traction, is the rocks. These are really quarterly goals that you establish. And I think Tommy mentioned this earlier, is before you even acquire the asset, you want to have a really earnest conversation with your property manager about what those rocks are going to be. So 90 days from now, where do we want this property to be performing? And then from there, you work your way back to today. So what are the monthly KPIs that you have to hit in order to hit those quarterly goals? And then, walk it back even further. What are the weekly KPIs that you want to be monitoring? And really looking at those KPIs on a leading and then a lagging factor. So lagging are things that are going to take a little bit longer to materialize, and maybe you don't have direct control over them. Things like maybe NOI, maybe cash flow, things like that, distributions, where it's a lot that goes into it. And then the leading are a lot of the KPIs, a lot of the indicators that you do have direct control over. So what does your leasing look like? There's a whole number of different KPIs that that are used to assess that. What do your turns look like? How long does it take you to do a turn? What are you spending per apartment turn, renovation, basically? So we have all of those established for the next 90 days, and then we monitor those not just with the asset manager, with the asset management team, but also we review those with our PM, because it's really important. They're so involved with the day-to-day. We want to show them, on a weekly basis. Okay, let's take a step back and how is the business performing, and have them think like we're thinking. We create a shared scorecard to manage this. So how are we tracking versus those rocks in those different KPI areas? And then in addition
Marc, can I jump in real quick?
Yeah, absolutely.
Before we leave that topic, I mean, it's way more easier to hold them accountable if whenever you're setting targets, you say, hey, does this NOI seem reasonable? Like if they've got some buy-in to the goals that you're setting, right, the accountability part just naturally happens, right? If we miss, like, they know, like, they're they're going to be we're going to ask some questions around that type of thing. But so I thought it was just important to note. Thanks, Marc.
Totally. Yeah, we have to get buy-in from the PM. It would be unrealistic to create these KPI, these rocks in a vacuum. On the asset management side, we can come up with all the most aggressive, plans and goals for the next quarter. But if your PM is not bought in, or they don't know what you're looking at, then it's not going to matter. They're going to get sucked into the day-to-day whirlwind that is being a property manager. So that's why it's really important on your weekly PM calls to go through those KPIs. And then the next thing here that we have highlighted is we have a monthly cadence with our bookkeeper, where basically the bookkeeper is taking the reporting from the property manager. They're also taking the reporting from our operating accounts, our bank accounts, which we have separate from the property manager. And they're reconciling those two and giving us back, financials, cleaned up financials on how we're performing relative to our budget, relative to our underwriting, what we call budget versus actuals. And so looking at our budget versus actuals gives us a really quick and easy view into, okay, are we doing what we said we would? And which way is it trending? So we have those monthly calls, and then typically we'll include those in our updates to investors as well, because it's really important to show them in case they have any questions about what's going on in the business. Most of the time, a lot of your investors are not going to examine this, but maybe 5% of your folks are going to get really into the weeds, and maybe the CPAs and the financial folks that are more financially inclined may dig into this stuff. And we put it out there regardless whether or not they look at it. We want them to know that this is how the property is performing. I'm not going to dive into accrual versus cash accounting. Just suffice it to say that you want to really look at both, because accrual is obviously the cleanest from an accounting standpoint. But at the end of the day, it matters what kind of cash flow you're actually bringing in. So then general ledger scraping, we also do that in tandem with our bookkeeper, where we're looking at the classification of CapEx versus OpEx. I probably don't need to dive into too much why that's important, but that's really an important exercise. You definitely want to make sure that those two are categorized correctly, whether you're looking to sell or whether you're looking to refi, or really anything. Tax accounting, it really has so many different impacts. So we make sure that our capital expenses, if we're replacing a entirely new HVAC, we want to have that reflected, or a new roof, we want to have that reflected in our financials. And then making sure that our general ledger items are categorized correctly. Again, all this is going to feed into our budget versus actuals. So we want to be looking at that on an apples for apples basis. We don't want our budget to be looking at, blind replacements are part of R&M, but then, in your GL from your property manager, blind replacements are somewhere completely else under utilities or something like that. So really scrutinizing expense items. That's really what it comes down to. And then this all comes together in our weekly calls. On our properties, we have generally one asset management call and one PM call. Typically, there'll be, the PM calls will be on a more frequent cadence. Maybe your AM calls, at least early on in the business plan, will be more frequent. You'll have to meet more often as a team, aside from your PM. And then as things get stabilized, the idea is that you can meet a little bit less frequently because there's not as much going on a day-to-day. Okay, but this is all stuff about running the property. And like I said, that's only half of really what creates our successful syndication business, is outperforming your budget, your underwriting. The other half of it, and I'd argue the more important aspect, is the investor experience. And that takes place, or that manifests in the distributions. So all of this, ultimately, everything on the asset management side is going to make its way to investors through the monthly updates and through the distributions eventually. And so, as I mentioned, we provide monthly updates. So I kind of covered this already. Provide them as much information as possible, not just the good about what's going on in the property. I think we all kind of saw the example a few months back of a company that did things the wrong way in terms of not keeping their investors in the loop as far as some of the maybe bad going on at the property. So you want to be really upfront and clear with your investors about what's maybe unexpected or what are some of the surprises, but more importantly, not just bring them a problem, but how are you mitigating those issues? So what's the plan going forward? So that's really going to be really important, so you don't catch anybody by surprise.